The forex market never sleeps, and neither do I. So let's go and see what the charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis on this channel. So make sure that you subscribe, and I will see you on the charts. In today's video, I want to speak about EUR/JPY. Now, why do I want to speak about EUR/JPY? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is providing a complete multi-time frame top-down analysis, starting from the higher time frames, going down then on the lower time frames. We will also check what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that the market has just created a quite strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see is that the market here has just retraced to a zone, which is in between the 0.32 and 50% of the Fibonacci taken on this monthly impulse, which is a quite strong support zone that we did expect the market to test and then reject to the upside. So here on the monthly, everything seems quite bullish. Going down on the weekly time frame, what do we see? Now, here on the weekly, we can see how the market has just created a move to the downside, correction, lowered low and equal high. Now, in general, after you see the market create an impulse, correction, lowered low and equal high, what you expect after that is for the market to provide another correction before then the continuation to the upside, basically for the creation of this inverted head and shoulders. So here in the weekly time frame, what we can expect is for the market to provide a short-term correction before then seeing a continuation to the upside. Now, if we look left, we can see how this zone is extremely strong support and demand, which is exactly the area that we are about to test and that we expect the market to reject to the upside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. We go down on the daily time frame, and what do we see? Now, here on the daily, we can see how the market at the moment, in creating this move to the downside, is also printing this M pattern. Now, in general, after the creation of an M pattern, you want to see the market make a move to the upside to go and complete the pattern at the previous support turned resistance. So here in the daily time frame, we definitely expect the market to provide a move to the upside to go and complete the pattern itself at this previous support turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials in the market are doing, we can see how lately net positions have been dropping. In fact, we went from having 118k net positions down to having 10.4k net positions. So clearly the euro has been getting weaker. However, if we go and see what we have on the JPY, we can see how we went from having a positive net positioning to having a massively negative net positioning of minus 63k net positions with 92k shorts and only 29k longs from an institutional perspective. And obviously, the fact that the JPY is so weak made EUR/JPY create all this move to the upside. So since we can still expect the JPY weakness, a continuation to the upside seems quite likely. So going back down on the daily time frame, it appears quite clear that there is definitely the possibility to be looking for the completion of this M pattern at the neckline, which is basically this previous support turned resistance. So how we will be approaching this potential short-term longing opportunity here with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective combined with the COT data. But when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So with students, we will be monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from an intraday bearish market as we have right now to an intraday bullish market, and only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding EUR/JPY to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete the pattern at its previous support and resistance, and possibly then to create a move even higher. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in it.